Welcome, dear traders. The US stock futures jumped today following overnight trading on Wall Street. Yesterday, all three benchmark indexes went up amid upbeat earnings reports. Asian stock markets are also growing today. Let's discuss how a rally on Wall Street affects currencies and what trend prevails today. Let's start. The main driver for the US dollar aggressive monetary tightening remains relevant. The Fed will keep rising rates until inflation runs steadily at the 2% target level. Minneapolis Fed President Neil Kashkari voiced such an opinion today. Bank of Atlanta Fed President Rafael Bostic expressed a similar point of view. He also noted that the regulator cannot solve all the problems fueling inflation. Nevertheless, the top priority is to tame inflation despite the risk of a recession. Other central banks worldwide are also focused on curbing soaring consumer prices. Although Neil Kashkari pointed out that the Fed's monetary policy decisions do not affect other central banks, this is not entirely true. The Fed sticks to the ultra-hawkish stance now, hiking rates more aggressively than others, so it forces other regulators to keep up. The majority of investors seem to be convinced that the watchdog may start tightening its monetary policy at a faster pace. According to the CME Fed Watch tool, the chance of a 75 basis point rate hike in November is now almost 97%. The US dollar index and the US Treasuries are up amid expectations of new sharp rate increases. Besides, the greenback remains the most popular safe haven asset amid the slowdown of the global economy, so the current bearish reversal might be breather in the steady rally. At the start of the week, the greenback faced a strong bearish pressure. It dropped lower following positive earnings reports and the U-turn in a UK tax policy. However, today it's gradually moving up versus its main rivals in the Asian session. It was trading at 112.44 after falling overnight to 111.76. The US dollar index is winning back losses. It's growing in the range of 111.92 and 112.52. The yen has been unable to regain ground for a long time because of the Fed's hawkish stance and a strong US dollar. It's declined to 145 in September 1st. The Bank of Japan undertake the intervention. Now the dollar-yen pair is approaching the psychologically important level of 150, so traders are anticipating another intervention. But the Japanese Finance Minister Shunichi Suzuki warned that the watchdog was meticulously checking currency rates with more frequency. There is a positive news as well, and Bank of Japan board member Suji Adachi said that the economy is gaining momentum despite soaring commodity import prices. Therefore, the Japanese authorities have to find balance when stimulating the national currency. Today, the yen is trading above Tuesday's closing price. In the Asian session, it was moving in the range of 149.06 and 149.49. The dollar-yen pair is hovering near 32-year high of 149.42. For this reason, the risk of intervention is quite high. The main purpose of the intervention is to curb speculation in the foreign exchange market, not to support the yen and its steady rise versus the US dollar. Given that the Bank of Japan is on the ultra-loose regulator, the pair may climb to 150 or 155 soon. As for the commodity currencies, they managed to rise against the US dollar following the local central bank statements about new rate hikes. However, the Aussie is unlikely to rise significantly as the Reserve Bank of Australia has recently decided to slow down the pace of a monetary tightening, taking into account concerns about a recession in the global economy, geopolitical risks, and China's strict policy to combat coronavirus. Market optimism, as well as the Australian currency, are sure to decline. And today, the sensitive to risk Aussie added gains thanks to a rise on Wall Street. Yet the main bearish factors, falling oil prices and the weak demand for the commodity in China, are widening on the Australian dollar too. This is why it has slid today versus the US dollar. In the Asian session, it tumbled to 0.63. The AUD/USD is trading below yesterday's close in the price corridor of 0.6287 and 0.6327. The New Zealand dollar is also trading below Tuesday's closing price. However, after the release of a higher-than-expected inflation figures yesterday, it climbed to meet expectations of aggressive tightening by the Reserve Bank of New Zealand. The Kiwi gave in to a stronger US dollar. However, it managed to rebound to 0.5686. In the Asian session, it was fluctuating in the upward range of 0.5669 and 0.5708. And that's all for now. Investors are now looking forward to fresh US economic reports. Industrial production data is on tap today, and this report may somewhat influence the movements of some pairs. Subscribe to our channel and keep close tabs on the market developments. See you soon.